you very much to once again to welcome you to Mason African Motives. We are still on Business Studies Grade 10, Chapter 1, Term 1 notes. Today we are going to look at organizational structure. We are going to be on organizational structure, whereby we're going to talk about factors influence the organizational structure. Factors that influence what? Organizational structure. So the first one, it says, first factor is that the size of the company. The size of the company. Like we know that bigger companies need more departments and managers. We know very well that bigger companies needs more departments and managers. For example, a large supermarket chain needs HR, finance, marketing, and etc. While small tech shop does not. That's what it means when you talk of what? The size of the company. Hope we are together, like I've said, bigger companies need more departments and managers. Need more departments and managers. As you have said that a large supermarket chain needs HR, needs finance, needs marketing, all those. But whereas small tech shop does not do that. That is that. So now coming to technology as another factor that influences the organizational structure. We know that the machines, systems, and equipment a business uses can shape the structure. We are saying machine, systems, machine systems, and equipment. And equipment a business uses. A business uses can shape its structure. Can shape its structure. For example, a business using advanced computers may need an IT department. That is that. Now coming to a resource is another factor that influence organizational structure, resources. When you're talking about resources, you're talking about money, employees, equipment that determine how the business is organized. We are talking of money, employees, talking of money, employees, equipment, that determine how the business is organized. That is that. Now we are coming on to strategic goals of the company. Strategic goals of the company. So here we can talk of what? We can talk of the long-term goals that help decide how to arrange department. We can talk of long-term goals. Long-term goals. Long-term goals can help decide how to arrange departments. For example, a company planning to expand internationally may create an export department. So that is how these factors influences the organizational structure. Hope we are together. Now let us come to the types of organizational structure. Types of organizational structure. We have functional structure. As it says, employees get instructions from more than one manager. Meaning workers may have two bosses for different tasks. We're saying Workers, workers may have two bosses, may have two bosses for, for different tasks, for different tasks. We're saying workers may have two bosses for different tasks. For example, a worker may report to the production manager and also to the quality manager. That is why we are saying employees get instructions from more than one manager. That is a functional structure. Also, he said the plan to be carried out determines who will be giving instructions. So meaning to say whichever task is most important decides who leads at that time. That is what we are saying. Whichever task is most important, whichever task is most important. So decides who leads at that time. For example, if doing a marketing task, the marketing manager directs what? The employee. Hope we're together. The structure confuses the employees as they report to more than one manager. Many employees can receive conflicting instructions. Meaning we are saying employees can receive conflict, conflicting instructions. Employees can receive conflicting instructions. Example, manager says finish early. That is manager A. But manager B says work longer. You see, now they are receiving what? The conflicting instructions. That's a drawback or disadvantage of reporting to more than one manager. Let's move on to criteria. Now we come to another structure, which is project structure. Project structure. So with project structure, it says this structure, the the structure is structured around projects, but employees stay in their departments. But employees stays in their departments. It simply says workers are grouped specifically for each project. Workers are grouped, are grouped specifically for each project. For each project. That is that. For example, the construction company forms a team to build a school. That is that. A project must be completed up to a certain point. A project must be completed up to a certain point. So that is that when we're saying a project must be. So, okay, sorry, good people. I was supposed to do a project structure, not matrix structure. Where I am is here. So I did explain a matrix structure with a project structure. That's a mistake. Please just forgive me. A project structure, like it says, this is a structure around project teams, meaning workers are grouped specifically for each project. That is what you have said. Workers are grouped specifically for each project. For each project. Like I've said, that's where we can talk about an example whereby a construction company forms a team to build a school. Also, he says it is a temporary structure because employees are drawn from different departments. It is what? A temporary structure because employees are drawn from different departments. So it simply says teams exist only while the project lasts. What it means is that teams exist, teams exist only while the project lasts. Only while project lasts. While the project lasts. While the project lasts. That is that. For example, after finishing the school, the team separates. That is where it's a temporary structure. Employees are then grouped together to form a project team which will carry out particular project. So, meaning to say, they work together until the project is done. It means they work together, they work together until the project is done. Until the project is done. That is that. So then we come to matrix structure. So it says this structure is structured around projects, but employees stay in their departments. So what it means is that workers work on projects but still belong to their normal departments. The workers, they are going to work on projects, but they're still going to belong to their normal departments. For example, an engineer works on a project A but still reports to the engineering departments. That is that. The project must be completed up to a certain point. A project must be completed up to a certain point. It means each team completes their assigned phase. It means each team completes their assigned phase. Each team completes their assigned phase. Their assigned phase. For example, designers finish their design stage first. That is that. A project is then passed on to the next team, which will carry out the next phase of the project. Means to say, each department completes a phase, then hands over. It means that each department complete a phase, then hands over. Then hands over. For example, after a design, the construction team starts what? Building. That's what it means. Now let us move on to line structure. Let us move on to line structure. So with line structure, it says employees report to only one person. Employees report to only one person. Meaning to say there is a clear chain of command. It means there is a clear chain of command. Chain of command. There is a clear chain of command. For example, a cashier reports only to the supervisor. Then it further on say only the director can give instruction to employees. Only director give what instructions. Meaning to say all authority comes from the top. All the authority comes from the top. That is that. For example, staff wait for the instruction from the business owner. Hope you are together with people. Now moving on, this structure eliminates confusion among employees as they report to one person. only. So it means clear instructions and responsibility. Clear instructions and responsibility. Clear instructions and responsibility. For example, no mixed message from multiple managers. So that is how clear it is. That is how clear the line structure is. So now let us move on to line and staff structure. Line and staff structure. So it says, under line and staff structure, experts act as advisors to the top and middle management. So it says experts act as advisors to the top and middle management, meaning professionals help but do not manage. Meaning professionals help but do not manage. For example, a legal advisor gives advice about contracts. That is that. Advisors don't form part of the business. They merely give advice. So it means that they are external consultants. For example, a tax consultant hired only for tax season. That is that. Advisors don't have authority over employees, which means they can give any instruction to employees. So they cannot instruct workers. That's what it means. They cannot what? Instruct workers. That is that. So now let us move on. Let us move on to administration function. Let's move on to administration function. So here we are on administration function. The meaning of administration function. Then we are talking about handling of information and data. Handling of information and data. So it means that administration manages and collects information. So, for example, regulatory sales. Further on, this administration is responsible for processing administrative information, which is essentially by administration. So, it means that as we said, administration, it is administration which shows when we are managing this model in relation to the system. So, it means that administration is because technical information by using the sent with the knowledge. So in sense, you have like some mistakes sometimes we don't even our office when such as finding scrolling down information. So you like about the things like finding and skills of information. Where you know also that we are thinking about keeping the documents organized. For example, finding my stock now, so that's it for folders. That is that. Now that you want to it's all the administration. Where will you know about those connection or information? So says information is collected from both outside and inside the business. So meaning to say internal equals to sales records, external equals to market trends. That's what it means. They are saying internal is equal to sales records, while external is equal to market trends. Is equal to market trends. For example, getting customer feedback. Getting customer feedback. That is what the external one that we're talking about. So now we are coming to correct and reliable information will be available for meaningful decision making and to run the business successfully. So, meaning we are saying good decisions depend on accuracy. Good decisions depend on accuracy, on accuracy. For example, managers need correct sales data to budget. That is that. Now coming to the handling of information. As it says, it is important for the administrative staff to handle the information correctly to avoid making wrong decisions based on wrong information. So wrong information leads to wrong decisions. So that's why we are saying it's important for the administrative staff to handle information correctly. For example, wrong stock number leads to over ordering. That is that. So now we are moving on. The administration function is responsible for dealing with the following types of information. So they are responsible for dealing with the following types of information: accounting records. Accounting records, as it says, the accounting records can be used to draw up financial statements and reports and keep an up-to-date all business transactions. So it means the accounting records, they are used to prepare financial statements. They are used to prepare financial statement. Financial statements. For example, recording all money in and out. That is that. Now coming to cost accounting, as this says, it determines whether the product can be sold at a competitive price, considering the manufacturing or production cost. Meaning to say, we are saying cost accounting checks if the product can be sold competitively. It checks if the product can be sold competitively. For example, a calculating cost to produce one t-shirt is very important. Now we come to budgets. That is a plan of estimated expenses and income for specific period. That is budget. So plan of expected income as well as expenses. So that is that. For example, monthly budget for stationery, you see, that is that. Statistics, the collected and classified numerical data. So here we are talking about numerical data used for analysis. For example, graph of sales per month. Hope we are still on one page, good people. Now let us come to information technology. Information technology. So it says IT is the use of electronic equipment to assist with various administrative tasks. So it means that uh, computers, printers, and email or scanners, because you're talking about use of electronic equipment for admin tasks. So we're talking of computers, we're talking of printers, email, to of scanners. Technology is used to both to communicate and have information referred to as information and communication technology, ICT. So that is that. So what it means is that technology is used to store and communicate information. For example, using of MS Excel to store customer data. That together. Now we come to office practice. Office practice. And it says office practice refers to how the administrative staff should handle their duties. Meaning, we're talking about rules on how things should be done. We're talking about rules on how things should be done. On how things should be done. For example, following proper filing procedures. That is that. That is what we are talking about in the level. What is practice, how it refers to. So it covers matters such as dress code or employees proper filing or telephone or internet. You see, uh, so now moving on to, like we talked about, it covers matters is dress code. Dress code. So meaning to say wearing appropriate uniform. Wearing appropriate uniform. When it talks about proper filing, we are talking about making it correct order. Making it correct order. Then it talks about telephone activities. Telephone activities, which covers the thinking. That is that. The internet usage now, we are saying using internet only for power. That we talk about what office practice when we say it covers matters such as transport, local filing, telephone etiquette, as well as internet usage by the staff. Now let us come to the difference now between data and information. Difference between data and information. So it says under that it refers to raw unprocessed facts found in statistics, graphs, or tables. So it talks about raw unprocessed facts, meaning, for example, numbers in a list like 10, 20, 30. That's that. Also, it talks about data can be collected from other business functions within the business. So mean to say collected from business functions that, for example, sales figures from the sales department. That's when you say data can be collected from other business functions within the business. Also, is data needs to be processed before it can be used as information. Here we are talking about processed, needs of processing, needs processing. So, maybe, for example, adding daily sales to get monthly sales. So, that's what it means. Also, data can be processed manually or using technology such as computers. Meaning, for example, typing survey results into Excel. So, that is about what? About data. Like we talked about raw unprocessed facts. We've talked about raw unprocessed facts. We've talked about collected data from business functions, needs processing, as well as processed manually or with computers. Now we come to information. Now we come to information. So if information is it refers to processed or analyzed data that gives specific knowledge to managers or make decisions. For example, sales increased by 10%. Sales increased by 10%. Information can be stored manually in your files, boxes, shelves, and computers, and etc. For example, reports saved in a file. That is when we're talking about stored manually or electronically. Reports saved in a file. You see, it is important to have what a backup for all stored information on computers or other electronic devices in case they are damaged. Simple says the information needs what the backup. Information needs a backup. For example, saving documents on the cloud. So the cloud is going to serve as a backup in case the information is damaged. Most businesses use electronic devices such as memory sticks, CDs to store information. So stored information in devices like flash drives or CDs. Saving reports on your USB flash. So that's what it means. So now let us move on to financial function now. Let us be on financial function. The meaning of the financial function. Financial function is responsible for planning, managing all the funds and assets of the business. So it means it ensures money and property are used correctly. It ensures money and property are used correctly. Are used correctly. For example, planning how to use business savings. That's what it means. Purpose of financial function. Purpose of financial function. They say the financial function determines how business capital, how much capital the business needs, how much capital the business needs. So it determines how much capital is needed, how much money is required, how much money is, how much money is required. For example, 50,000 is needed to start banking business. So let's start. 50,000 is needed to start the banking business. Establish the sources of acquiring the capital. So it establishes source of capital, where to get money, where should get money. For example, bank loan or owner savings. That's that. Besides how to invest or allocate the capital funds in the business. Besides how to allocate the capital, meaning which departments get how much, which departments get how much. That's that. That is how we're going to say it. How to invest or allocate financial capital funds in the business. You're going to be able to know which department get how much consultant. So that is that. For example, buying new equipment ensures that business can generate enough income to cover the cost of raising capital. So it makes sure income is enough to pay loans. That's how it ensures business can cover cost of raising capital. It can make sure the income is enough to pay the loans. That is that.
Where financial statements to present to the bank or investors to convince them that the business is financially clean. So this to convince bank or venture investors. Which to convince banks or investors. That is that. For example, total income statement to bank. Total income statement to bank. So now let us move on to this is why business need finances. This is why business need finances. This is why business need finance. Is that? So personally, business need to find the best investment. Find the best investment. Example, buying property. Buying property. Business need to source funding. Source funding. Example, getting on a loan. Audit and control the spending of the finances. Meaning, we're talking about the audit and control spending. Example, checking the receipts. Checking of the receipts means you're controlling what you're spending. Plan so that finances are spent in the most efficient way. For example, budgeting. That's how we do it. Like, allocate the necessary funds to do different departments. For example, giving marketing 10,000. That is how they can make the allocation. So that is that. So now let us move on. To source of financing. Source of financing. So source of financing, we are first going to talk about loan. This is a borrowed, this is a money borrowed from bank and we pay over a period of time. We're talking about the bank loan, borrowed from bank and we pay with interest. For example, loan to buy a machine. So that is that. The money is repaid with interest. Like we've said, the money is repaid with interest. Also, the entrepreneur who borrowed money will attach his or her fixed assets as surety to the value of the loan. So for collateral security. So the person who borrows the money, like the talking about the entrepreneur, he or she is going to try is to attach his or fixed assets as a surety to the value of the loan. Bank loans are usually used for long-term financing. So that's that. Now we come to bank overdraft. So bank overdraft is a short-term loan on a bank account. This one is a short-term loan. Unlike what the bank loans that we talked about, because we've said we are usually long-term. But when we about bank overdraft, it's a short-term loan added to the account of the entrepreneur. And it is also paid with interest over the period of time. For example, account allowed to go negative to pay this. So that is when we flow more than what we have in your account. That is that. So now let us come to asset-based loan. Asset-based loan. He said, this is money provided by government to small business that are developing. So asset-based, that is a loan used to buy an asset. The money provided by government to small business that are developing. The money does not have to be paid back if the benefits. If the benefits what? The community. Like we have said, this is provided by government. So if that money benefits the community, the money does not have to be paid back. So the government want to see small developing business benefiting the community and the environment in some way. So that is that. Now we have receivable finance. We have what? Receivable. Before we can go to, we're talking about the asset. Sorry for that confusion. We're under asset-based loan. Asset-based loan, as you have said, that is the money lent to successful business that want to expand further. So it means this loan is used to buy an asset. So the loan is used to purchase an asset. That asset belongs to the lender until it is fully paid off. If the money is not paid back, then the lender will take that asset. So for that confusion, so the one that we talked about, it was grants. So that I did talk about grants, while at least I was trying to talk about asset-based loan. But with grants now, grants is the money provided by government to small business that are developing. So that is a money from government that does not need repayment, like we've talked about. And it does not, the money does not have to be paid back if it's going to benefit the community, like we've said. So the government want to see the small developing business benefiting the community and the environment in some way. So now, receivable finance. So this is a loan provided to business while waiting for payment of goods or service provided to afford cash flow shortages. So receivable is a loan given while waiting for customers to pay invoices. For example, a business gets 80% of invoice value as cash. That is that. The loan is equal to the outstanding invoices that are issued. So hope we are together. Then let us move on. So now we are coming to angel funding. We are coming to angel funding. So he says, this is money offered by wealthy entrepreneurs to other businesses for share in that business. So it means rich individuals give money in exchange for share. So those bigger business. So they are going to give money to those smaller struggling business in exchange for a share. So example, entrepreneurs give 20% share for investment. That is that. So this is usually used at the start of the business and carries high risk of for the investor. That is that. Venture capital. This is money offered by individuals or organizations to start up or expand the business. This is done in exchange for a share in the business. The investor usually requires management position or to be a board member in the business. So venture capital organization invest for shares and management roles. So they invest for them to get shares. Those other organizations also for management roles, like they've said, they want that management position as well as to become the board member in the business. So that is that. So now we come to the budgeting. We come to budgeting. As it says, it is a planning tool to estimate money that will be received, that is income, and how it will be used, that is expenditure. So it means that a budgeting is a plan that estimates how much money the business will receive, which is income, and how it will be spent. That's when you're talking about what? Expenses. For example, a business plans to earn 50,000 and spend 30,000 next month. So it says once the budget is drawn, it should be compared to the actual income and expenditure. Meaning here we are talking about budget versus actual. Here we are saying budget and versus actual. So, meaning to say, after making a budget, compare it with real income and expenses. For example, budgeted 10,000 for advertising, but actual spend is 12,000. You see, that is why you're going to compare the budgeted as well as the actual budget. So that is that. It's also said assist business to keep track of its finances and show better profitability and ensure better profitability. It assists business to track of its finances and ensure better profitability. Here we are saying helps track finances. It helps track finances. Helps track finances. Meaning to say, budgeting helps business to control money and improve profits. For example, a bakery sees it is overspending on ingredients and adjust. That is that. Each department within the business should have its own budget. Each department needs budget. Department, each department needs a budget. Each department needs a budget. So it means every department prepares its own spending plan. For example, marketing gets 20,000, production gets 40,000. That is that. So now let us move on to types of budgets. Let us move on to types of budgets. We have capital budgets. He says it estimates the fixed capital. It estimates fixed capital. So it means it calculates money needed for long-term assets. It means that it calculates money needed for long-term assets. For long-term assets. So for example, buy machinery for 200%. Also, it says it is drawn up every 5 to 10 years and revised annually. So it means that it covers long-term planning. It covers long-term planning. For example, plan to replace factory equipment every 5 or 7 years. So it plans the purchasing, upgrading, changing of fixed assets such as building, machinery, and equipment. So that is that. Meaning that it is used to plan, purchase, or upgrade long-term assets. But with cash budget, as it says, it estimates the working capital. So it means it predicts short-term money needed for daily operation. It predicts short-term money needed for daily operations. For daily operations. For example, money needed for salaries and electricity for the month. It is drawn up at the end of the financial year for the start of new year and revised monthly. So it is drawn at the end of financial year and revised monthly. So it means it is updated often to match cash flows and outflows. For example, store updates January cash budget in February. It assesses whether the business will be able to purchase all the needs for its operation. So, meaning to say, it shows if there is enough cash to run the business. So that is that. Now let us come to investments. Let us come to investment. Come to investment.
So investment is business invests some money from its profit to generate wealth and income. So it means that companies use leftover profits to create extra income. That is why it's in business, invest some money from its profit to generate wealth income. That is that. Invested money increases without labor effort. That is when you're talking about passive income. That's when you're talking about passive income. That is when money earned without working for it. For example, interest earned from a fixed deposit. Business can choose to invest in financial institutions, government bonds, or public companies. So here we are talking about types of investment options. So business can invest in banks, government bonds, shares, or property. For example, buying shares in a public company. So that's when we're talking about here. That's when we're talking about investment options that are available, include property investment, unit trust investment, government, retail savings bonds, as well as fixed deposit. So that is that. Now we come to the types of capital. We have fixed capital. The fixed capital, that is money pays fixed assets. That is the money that pays what? Fixed assets. For example, the money that is going to pay for land and buildings. Those are the fixed assets that are going to be there for a longer period in the business. And also fixed capital is it finances long-term capital needs of the business. Example, we're talking about capital market, selling shares, mortgage bonds, and etc. But with working capital or operating capital, that is a money that pays day-to-day activity. We're talking of trading stock, we're talking of the raw materials that are needed for production to take place. Finance the short-term capital of the business, because we know fixed capital, it finances long-term, but with working capital or operating, it finances short-term. Example, we're talking about money market, credit allowed by suppliers, short-term loans. Now we are coming to own capital. Own capital. So own capital is the money provided by the owners of the business. So it could come from their own savings or the sale of their assets or investors. Example, personal savings and venture capital. So that is the money that is provided by the owner himself or herself from his or her savings, from his pensions. So that is that. Borrowed capital, it is the money borrowed from financial institutions like banks or a person. So the money should be paid back with interest. Example, bank loan or bank overdraft. So this is one. This is when you borrowed from another person or you borrow from the bank. So the money needs to be repaid with what? Interest. That is that. Now we come to the difference now between fixed capital as well as working capital. Like we've talked about, fixed capital money pays fixed assets, land and buildings. So meaning we are saying it pays for fixed assets like we've said. So it is used for long-term needs. So for example, building a new factory. So that is that. So finance long-term capital needs, businesses. Finance long-term capital needs of the businesses. So used for long-term needs, like we've said. Examples are capital market, selling of shares, mortgage bonds. So that is when you're taking a mortgage to buy a building, that is that. But with working capital, it pays for daily activities, like we have said. So it is a short-term needs. So as we are saying, finance the short-term capital of the businesses. So you are paying for monthly transport costs, that is that. So, like I said, example, money market credit allowed by supply short-term loans, like we have said. So that is that. But now owned as well as borrowed capital. we have said when you're talking about, that is a repetition of what you've talked. We have said when you're talking about your own capital, that's the money that is provided by the owner himself. For example, we have said business uh, owner invests 100,000 into the business from his own pocket. So that is that. So the business, that is a permanent capital. Business does not have to repay owner's equity. It's not a liability. It's not what? A liability. Like we've said, it's a permanent capital. As company is not under obligation to repay the amount. So once we are saying it's a permanent capital, it means business does not have to repay owner's equity. It is not a liability for a business. So meaning company does not owe this money to anyone. Return on capital is on profits. So return is profit. For example, owner receives dividends. But coming to the borrowed capital, now, it is obtained from financial institutions. For example, we can talk of loan from bank. It is a temporary capital as it is to be repaid after a fixed period. So you know it must be repaid. So business, for example, business repays loan in 5 years. So that is that. This one is a liability unlike owned capital. This one is a liability for company. So because, for example, business owns the loan today to the bank. Return on capital is paid in the form of interest. So that is that. There is a return. Return is interest. So that is that. So now let us move on to purchasing function. For the purchasing function, the meaning of the purchasing function. The purchasing function plays an important role in buying quality raw materials and services for the business. So the purchasing function, this department, all they do is to buy good quality raw materials that are going to help the business to produce good quality products. It should continuously look for suitable and new and better suppliers. So they are the ones to choose the suitable suppliers with reasonable prices, with quality products. It should place orders with suppliers and follow up on them to ensure that ordered products are delivered on time. So they are the ones to make sure that they are going to make sure that the ordered materials are going to reach the hands of the business. So they will do that by making a follow-up. It ensures that ordered goods are delivered at a agreed price. So they make sure that the ordered goods are delivered at a agreed price, right quantities, as well as the right quality. So what they have ordered are the same prices that they placed the order, with quantity as well as the quality they ordered. So they have to make sure that they check when the goods, when they receive the goods. Purpose of the purchasing function. They manage stock to ensure that sufficient levels of stock to carry out the business operations. So they make sure that the stock is enough to carry the business, so that the business is not going to find themselves selling nothing now when the customers want the stock. Continuously looking for the best reputable suppliers. So they look for those suppliers that are providing a good raw materials, suppliers that are reliable. So they look for such suppliers. They make regular contact with other business departments to determine their needs. So they make sure that they connect with other departments so that they know what is needed in those various departments. They send damaged goods back to the supplier and see to it that it is replaced. So for those damaged goods, it is their responsibility that they make sure that they are returned and they are replaced with the correct goods. that are without errors. Received confirmation that all goods were according to the specification and price invoiced as quoted. They also negotiate best possible term of payment with suppliers. So now we come to activities of the purchasing function. Activities of the purchasing function. Purchasers should have expert knowledge of the product they need to buy and about the market in which they operate. So they should have a ground knowledge about the product that they are looking for, because they will find themselves with what? With the product that is full of problems, full of errors, or they will find themselves with incorrect product if they don't have knowledge about the product. Find out the needs of other business departments. So that is the role that needs to be played by this department. Look for suitable new and better suppliers. Like we've said, that they are the ones to look for suppliers that are reliable, that are going to give them good products or materials, raw materials. Ensure that there is enough stock available for continuous production and sales. So they are the ones they are responsible to make sure that the stock is enough for production to continue. Place orders with suppliers and make follow up on them. That is that. They ensure that ordered products are delivered on time. Send damaged products back to the suppliers and see to it that they are replaced. Like we've talked about, that it is their responsibility to make sure that those products that are damaged are taken back and then they are replaced with the correct ones. Buy the right amount of stock quantity so that the business does not run out of stock. So they have to make sure that they buy enough so that the business is not going to find the business is not going to find itself with a shortage of stock. Buy goods from best suppliers who supply the goods at the right time and place. Get the best price for the quality and the purchasing function requires. Keep the correct stock level on hand, and they are to make sure that they record the cost price and selling price of the stock. So now we come to the purchasing procedure. Determine the need for the product and requisition. So liaise with financial department as what? As a purchasing department to establish the budget for the purchasing of the goods and services. We know these departments needs each other. So before they can go and try to buy, they need to meet the financial and then they draw up the budget. What do you want to buy and how much does it cost? So this is where the financial department is now going to be involved. Determine the product or material resources needs of the business. Find the right quality or quantity of goods or service at the right price and at the right time. Determine the price of the product. So find the best price by obtaining quotes, tenders, or making inquiries. So let us move on. Now we are to select and choose suitable supplier. So the purchasing department should choose a reliable supplier for its materials and products. So choose the reliable suppliers who are going to be there at any given time, anytime you want the raw materials. Evaluation criteria based on quality of raw materials, prices, and delivery time should be used to select the suitable supplier. So for purchasing the function, they have to go for a criteria of looking for quality raw materials, reasonable price, and making sure that the suppliers they're looking for is going to deliver the raw materials on time, so that the production is not going to stop because of the delays caused by the suppliers. The purchasing department should conduct a thorough investigation about potential suppliers and their reputation and reliability and their reliability. So now place an order after choosing a supplier now you are sure that is a correct supplier. Now you are to place an order. You are to place an order. So that is why I say the purchasing function should place an order in writing so that the goods delivered can be compared with the order. So make sure that it is in writing so that when the goods are delivered, now you can compare whether this is what you ordered or not. Confirm the prices of the goods on order to avoid unexpected surprises when the payments are made. So you find that now you've ordered goods that cost 500 and then you end up having to pay now 700 now. So make sure that you confirm the prices. Collect or receive the order. The purchasing department should ensure that the right orders are received and recorded. The quality and quantity of stock received should be checked against the order. You check, this is the quality that you've ordered, and this is the quantity that you've ordered. So you check against the order when the goods are delivered. The purchasing department should keep a copy of delivery note for goods for records keeping purposes. Now, after you've collected or received the order, now you can pay the supplier. Purchasing department instructs the financial department now to pay the supplier after delivery of the order. Now we can try by honest instruct the financial now department to release the money to pay the supplier. So the supplier must provide copies of the requisition form to the purchasing department. Purchasing department must provide a delivery note to the financial department, and the supplier sends the invoice to the financial department for final payment after satisfactory delivery. So that is that. Now we are now to distribute stock. So the purchasing department should ensure proper distribution of the stock or raw materials to all relevant departments. Now you've received the stock now is there, so you can distribute within the business. So now it can go to various departments. Distribution of stock should be in line with prerequisite orders from each department to avoid stock loss. So now complete the order. Ensure that all the correct documentation is placed and filed for future reference. So this is the end of the presentation. So we are still going to continue with this chapter 1. But for today, this is our end of the presentation. Make sure that you share with others. And please, good people, let's make sure that we hit the subscription button. Thank you very much.